Hey, the stock market is always on the move, but more importantly, there are undercurrents and undertones that are constantly shifting and adjusting. Some are driving the market up, some are driving the market down. Today, I'll share with you the tool I created during COVID to help me make those assessments and have the conversations about what's driving the market.
This is The Rare Advisor, proud to be a part of the Advisor Advancement Network and home of a business model supercharged by recurring and repeatable events. Your host is Mike Walters, CEO of USA Financial. He is an investment advisor representative of, and securities are offered through USA Financial Securities, member FINRA SIPC, a registered investment advisor.
Hey, welcome back to The Rare Advisor. Today, I'm going to show you something pretty cool. I had time during the COVID lockdowns to build out my new little creation that I had chalkboarded for quite some time, but I was able to dive in deep during the lockdowns and come up with a new real-time market trending system. Now, we bring in tons of data from the stock market. We have technology that taps us into all that, obviously, as a TAMP platform and as an asset manager. And I wanted a way to identify kind of what were the undertones, what were the undercurrents taking place in the market. Now, many of you have been asking me to share an explanation of this because you've seen me use it with investors, with consumers, people who are watching our trending report, which I do on a quarterly basis for investment clientele. You've seen me reference some bits and pieces of this. And today I'm just going to show you 4 quick screenshots so that we can talk about what it is that this allows you to do. And I'm going to start with a quick analogy. I've used it a time or two before, so pardon me if you've heard this once already. But I live near Lake Michigan. My family loves to spend time on Lake Michigan. And what you realize when you've got a lake that's, over 300 feet deep in its deeper areas, the water at the bottom of the lake is very cold. The water at the top of the lake, if the weather's cooperating, can be nice and I wouldn't say warm, but it's tolerable, let's call it, in the summer. And so let's say 75 degrees is the water temp during the summer. It's a beautiful sunny day. Everybody's playing in the water today. And then we have sunshine. We have a beautiful evening. It's, 85 degrees. And the next day, it's still 85 degrees. It's still sun shining. But the water temperature, instead of being 75 degrees, now it's 60 degrees. What has happened is the lake has turned over. I can't give you the science behind it. I don't know if it has to do with wind patterns, currents, whatever the case is, but literally the cold water at the bottom of the lake has shifted up and that warmer water at the top of the lake has gone to the bottom. And now suddenly, your day isn't what you hoped it would be because the water is way colder than expected. The stock market works kind of the same way. There are always these undercurrents taking place. So when the S&P 500 is working its way up on, let's just say, a relatively straight up pattern, you don't know if it's because of the growth side of the market or if it's because of the value side of the market. And maybe a year ago it was because of the growth, but as the bull run continues, now it's the value that's taking over. I want to be able to see that stuff. I want to know what it is and kind of dig beneath, almost like a radar system. I want to look at what's going on in the market. So I think it's cool. I hope you enjoy what I'm going to share with you. I'm going to show this to you right now. If you're listening to the podcast, you may want to save and mark this and come back and check out the YouTube channel when you get a chance. And here we go. So as I mentioned, it's a real-time market trading system. We're going to take 4 different calculations, formulas that are being run in real time, power, support, demand, and torque. And I'm going to add those together to get an overall score. Now, the way that works is, again, as you might expect, we're looking at the longer term structure or power behind a particular holding, be it an index, a stock, an ETF, a bond fund, whatever the case might be. And then we're going to also look at the shorter term support it's receiving. Then we're going to look at the recent bull bear demand that's taking place. And then we're going to take a look at the directional torque. So every day the market's, moving up, down, especially when it's volatile, there's a torquing that takes place. And I want to see, has a thing torqued in one direction or another? And then I'm going to add all of those things together to get myself a combined overall score. But it's very handy to see the multiple equations being calculated at once because you can get literally a visual of what's going on in the market. So let's jump into that. here we are at the top with market capitalization. And I always like to highlight some of the things that help me do a quick visual assessment. Here's the overall market represented by the Russell 3000. And right underneath it, doesn't always look like this, by the way, right underneath it is the 1 to 3 month T-bill, so cash, right? So we've got the overall market, we've got cash, and then right underneath that, again, not usually like this, is the bond market, represented by AGG. And then down here a little further, we see internationals, kind of the overall international market. Now, here you could see the market, and this is, again, I'm talking on December 1st. So this is end of November numbers coming into the first day of the month with December. And I'm seeing a lot of orange taking place with the torque, the demand, and the support. That means that is driving down the overall calculations on these different holdings. Now, generally speaking, torque will move first, followed by demand, followed by support, followed by power. We add all that together, we get ourselves a score. Whether it's going to twist and start moving up or twist and start moving down, torque will usually move first, followed by the others in that order. So here, I've got the overall market, as I mentioned, and right at the top of the list right now, driving the bus, is the growth subset from the S&P 500. Now, keep in mind, an index is usually going to be in the middle itself. The S&P 500 itself, the index, will normally be running in the middle. And then on top of that, I'll either have growth or value. And then beneath that, I'll have the opposite of growth or value. Today, we have growth on top. Here's the index itself in the middle. And then down here is the S&P 500 value. So what that's telling us is when we're looking at, S&P 500 growth, and then here's QQQ next in line, that's the NASDAQ 100. We have core U.S. growth. That's kind of like the overall market growth. And then here, I'm starting to scribble all over it, but you've got the S&P 100 and then the S&P 500. So what we're seeing here is that large cap growth is moving the market, is what's driving the market right now. Look down here. Here's all our mid cap and our small cap down here, lagging the overall market represented by the Russell 3000. Now, if I come here to the sector, I can see the same thing. Here's the Russell 3000 right in the middle. And right up here, what's driving the market? Information tech, consumer, discretionary sector, real estate, and utilities. What's driving the market down is down here at the bottom. Consumer staples, healthcare, materials, financials, energy, industrials, and at the very bottom down here, we've got telecom services. So that's what's driving it down. And look again, here's our line. Our orange to the right is telling us that the negatives are dragging down what's going on up this way. Now, if we go to the next page, I can look at internationals. I'm still going to compare it against the Russell 3000 because I want to know, how does the U.S. market comparing to the rest of the world? And you'll see that the U.S. is winning the day. So the U.S. economy, the U.S. market is top dog globally right now. And then even our cash and even our bond market is coming in ahead of the rest of the internationals. And here's the international kind of representing the overall international. And just like I said, it's kind of in the middle, right? About half and half are above it and below it. And so very interesting there. But then look what happens when we get down to a defensive position. So here, let's call it bonds. We're talking about bonds. Look at the line. It's different angle. So in other words, I'm getting positive numbers here that are driving. The negatives are leaning more towards the power and so on. So they're starting to go away, which means the bond market is starting to come up right now. So here's the Russell, and we've got long-term treasuries are coming in above the stock market right now. And then here's cash. Here's the overall market. And then down here is some of the corporate and some of the other stuff that isn't necessarily driving the overall bond market, but we're seeing that the bonds are now climbing. So in a very quick one-stop view, I get to see and get a good feel for what's going on in the market. So if somebody wants to ask me, hey, why is this happening? Or how come our risk management model is starting to bring in more bonds and defensive positions right now? This would be why. And what you'll also notice is if you overlay this onto individual stocks, the power of this, or the truth of this, just kind of keeps rolling on through, if you will. So what do I mean by that? Well, if we're seeing that in market cap, it's large cap growth that's winning the day. And then if we go over to the sectors and we see, let's just say technology is winning the day over there, then when we drill down on the stocks and run a similar scoring system, what we're generally going to find is large cap technical stocks or technology stocks that are going to make it through our screening criteria and end up in any given particular model. So again, useful tool. I hope you found it interesting. Let me know what you think, because if you guys love this, then we'll do more with it. But for now, it's a great little one-stop shop to let me identify with what's going on in the market. Hope you enjoyed that. Talk to you soon.
This information is for licensed financial professionals only and is not intended for use in soliciting sales from the public. The views expressed represent the opinions of the presenter or their featured guest, not necessarily those of USA Financial or its affiliated subsidiaries. Industry references are generic and not intended to represent actions or beliefs of any individual or entity. Content is only presented to illustrate general principles, beliefs, or ideas and should not be construed as legal or regulatory advice. Trademark and copyright protected. USA Financial and Affiliates.